The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning and welcome back here to the Financial Exchange on a busy week, a huge earnings week, a big Fed meeting week. We've got other economic data points out as well, but the big news remains focused on these big earnings calls and also how semiconductors have been performing this week, which the answer, big hint here, is not terribly well on a few different stories that we have to cover here. The Korean market overnight was in shambles, down a good 10%. We'll cover that and what's driving Korean markets in particular, not a market that frankly was talked about much prior to 2025. We've got markets here in the U.S. in mixed territory as we open up the show, with the Dow up about 0.75%, while the NASDAQ is down by about 1%, which kind of perfectly defines what's driving markets today, which is tech, concern about AI chip valuations in particular. The Philadelphia Semiconductor Sector Index is down a good 5% in early trading today. So that is going to be, I think, a driving force right now. But what we are seeing, like I said, overnight, we saw this chip rout deepen, and I think there were two big stories that came to pass yesterday that had investors somewhat spooked here. The first one had to do with NVIDIA and OpenAI, a little tie-up that seemed rather circular, and we talked about it on the program yesterday. A
little tie-up.
Yeah, but why don't you go ahead here with what we saw yesterday between OpenAI, the maker of ChatGPT, and NVIDIA, the designer of the highest-end semiconductors that are going into every AI model out there.
So what we have here in terms of the AI space at the moment, where NVIDIA has been the greatest benefactor of everything that's gone on the last few years. Their chips have been integral into the building out of AI, and there continues to be a constraint on computing. So companies like OpenAI can't get enough of computing resources. And so as a result of that, they have been scouring all over the world to look for more places to put data centers. And what we saw from the news yesterday was that NVIDIA has been in talks to potentially guarantee financing for a lease of a 10 gigawatt data center that would be about 50 miles south of Columbus, Ohio. Just to give folks a sense of size and scale, 10 gigawatts is about equivalent to what the electricity consumed by 8 million households in this country. So it is enormous.
Big?
Yeah, it is really big. Everything that we're going to talk about here is big in terms of dollar amounts and size and scale. So NVIDIA has basically been like the equivalent to you backing your son or daughter's rent, the guarantee behind it that, hey, if my son or daughter can't pay this, exorbitant rent in New York or wherever it may be, we got you, the parent with deeper pockets. Think of NVIDIA of like that situation here. They have deep pockets because they are generating tremendous amounts of free cash flow. They have very high margins that they operate under. What's concerning about this agreement, and there are numerous of other examples like this, where NVIDIA has been growing their revenue at just an absolutely astounding pace. And the reason why they were, for a moment the largest company in the world. I think over the course of the last week, Apple's taken over that spot again, is because they've been able to grow revenue 70% year over year, 100% year over year. In order to justify the valuations that they're at today, they need to have that revenue continue to grow. And a lot of projections have them slowing down in the future because as these data centers continue to get built out, they won't be able to sell as many chips. This is a way for NVIDIA to be able to continue to sell chips, is by basically kind of using its financial balance sheet that is a real significant war chest to backstop some of its biggest customers, OpenAI being one of them. The concerns that you have here with all of these agreements, and this is just one of them that the markets focus on, there are just dozens of examples of these, is that if anything happens to OpenAI, a company that is generating about $20 billion in revenue, has a valuation of about $850 billion, but is burning through billions of dollars a year, losing money, then you have NVIDIA that not only is potentially in agreement to backstop this leasing agreement for $250 billion, they're hoping that they're going to get $350 billion of revenue from all the chips that would go into this data center. Oh, by the way, they've also invested $30 billion in an equity stake in OpenAI. It just starts to snowball really quickly. You're basically leveraging the bet on this AI ecosystem that if anything goes wrong for OpenAI, you and I may think, oh, that's a privately held company. That's not going to have an impact on my portfolio within my holdings. Not anymore. I mean, it's just gotten so entrenched that
NVIDIA's using its creditworthiness to backstop OpenAI. Plenty of big publicly traded companies have big stakes in OpenAI and other network deals here. And so, I think that the piece there that spooked investors a bit is you are inexorably tying these two companies together. Therefore, their successes, their failures are being tied together here in a way that didn't exist previously, or existed to some degree, but not this third. Before it was just, hey, you might lose some of the purchasing of one of your biggest customers. Now it's, if you lose that purchasing because they're not doing well, your balance sheet is also in trouble because you're backing their debt. The other piece, though, that kind of went over my head over the weekend was this new Chinese company, CXMT, and I think that did rattle markets a little bit too. Not because anybody has any degree of certainty that this, 2016 founded company is going to be ultimately incredibly good at putting together, RAM chips for the AI servers. But one thing that has held true with Chinese companies over the years is that when the Chinese government and Chinese industry decides that they want to get into a space, they tend to remove all the profit from that space. Mm-hmm. They don't have the ability to go and literally remove the profit, but what they do is they tend to oversupply a market with these products and bring down the profit margins so significantly that nobody else can compete. And we've seen this across all sorts of industries, solar panels, electric vehicles, all sorts of rare earth goods, right? The reason we were talking about last year why the Chinese have a throttle on rare earth materials is not because you can only find them in China. It's just that their government and their leadership has decided that they want to be a critical supplier of it. And so they have sank every other competitor in the industry because they know they can put them out of business and get market share. And so we don't know with certainty that China is viewing the chip sector the same way, but they've made pretty big strides in their AI models. They, too, want to develop this stuff pretty quickly. And I think many people are out there looking at this and saying, hey, if the Chinese government puts the full backing and weight of their power behind this and allows banks to make under market interest rate loans and backs in the same way they have some other strategic industries like the auto industry, what does this mean for cutting edge chip designers, RAM manufacturers, all of these companies that are getting absolutely walloped today? When you take a look at, the semiconductor names as a whole, right? NVIDIA's down 1 1/3, Broadcom's down 2, AMD's down 9, Intel's down 8, Micron's down 10.5. You have these companies taking a big step back here after what was a truly tremendous first half of the year. And by the way, that also applies to all of the equipment suppliers to the semiconductor index, right? So Lam Research, Applied Materials, all of these getting absolutely whacked in early trading here.
I'm not intimately familiar with CMXT and CXMT and its memory capabilities, but in general, from what I've understood about the memory space with all the U.S. players, is that it's relatively constrained in terms of how much supply that you can bring on over a period of time. This is an incredibly sophisticated and capital-intensive process in order to bring on more memory capacity. So while always the market is trying to look forward in subsequent years to assess the profitability of the SK Hynix or the Microns of the world, I have a degree of skepticism as to how much supply they will be able to flood the market with. But it points to, regardless of my skepticism, the trading activity that we're seeing, the volatility, points to everyone's trepidation in this sector in general. The reason why, the amount of volatility, Mike, on a daily basis that we see from the semiconductor indice is just incredible. It seems like every day it has to move 5 or 6% in one direction or another. And so that is really what we're seeing with investors, is that they just don't know how to assess these looming risks, where I might mention that I have skepticism on this particular risk. The market is always been, just for the last 3-4 months, it seems like, really in a concerned state.
Let's take a quick break. When we come back, we mentioned what was going on in Korean markets. I want to bring it back up because there is general semiconductor concern, and then there is the Korean stock market, which is a bit of a different beast in this moment in time. Quick break. We'll be talking about that next on the Financial Exchange.
From markets to money to business and financial news, watch the Financial Exchange every day on YouTube. Hit that subscribe button and keep up to date on the market news you need to know. This is the Financial Exchange.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001, or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local Heart Walk. Extraordinary starts with you. Join Heart Walk today. Find your local Heart Walk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Fresh, local, in season. Celebrate National Farmers Market Week, August 2nd through 8th. Visit your local farmers market for peak summer produce from sweet corn and heirloom tomatoes to peaches and blueberries. Every purchase supports local farmers, strengthens your community, and helps keep fresh food accessible across Massachusetts. Sponsored by Mass Farmers Markets, supporting over 200 farmers markets statewide. Find a market near you at massfarmersmarkets.org.
Daily financial content in your feed when you want it. Follow the Financial Exchange on Instagram. This is the Financial Exchange.
The Financial Exchange streams live every day on YouTube. Subscribe to our YouTube page and follow market activity all morning long. Only here in the Financial Exchange Radio Network. Just search the Financial Exchange on YouTube and hit that subscribe button.
So we have heard more and more pieces over the last few years bemoaning the concentration risk of the S&P 500 these days, Paul. And to be fair, you go take a look at the top 10 names, and almost all of them are either benefiting dramatically from the AI trade in sales of things like semiconductors or spending dramatically on the AI investment through data center build-outs. And really the only ones on the top 10 that aren't doing so all that much are Apple and Berkshire, and even there, it seems to be an insinuation that they will spend, or Berkshire Hathaway has made some investments in the space, so that's something. When we talk about the Korean Kospi Index, though, we're talking about a very different type of concentration risk because Samsung Electronics and SK Hynix make up about 50% of the overall index. So it's, if you're going to talk about the Kospi Index, you're pretty much saying, hey, SK Hynix and Samsung, what did they do yesterday? And that will tell you what the index really did, because it is all those companies, right? Hyundai, for example, a very household name, makes up 1.5% of the index. So nothing compared to these overall companies. Yesterday, this index was down a good 10%. And so you take a look at that and you wonder, okay, is that really comparable to U.S. markets? The answer is clearly no, because it's so hyper-concentrated in these tech companies. The other piece, though, that I just found not entertaining, but rather scary, the amount of retail trader leverage in this market has been written about quite a bit over the course of the last month. In July, for example, there were 1.2 million retail margin calls for the month of July. So a margin call, if you're not familiar, you can use your portfolio to borrow money from a investment custodian of some sort or another, and they will put a limitation on how much you're allowed to borrow, and they will also put a limitation on how far your portfolio is allowed to fall before they will just sell your stocks or tell you need to deposit more money in order to prevent those stocks from being sold, because they basically don't want to lose their shirt on holding a loan, a loan for $50,000 on a portfolio that's suddenly worth $30,000. That's not a terribly good place to be. There's only like 10 million or 13 million retail traders in Korea in the first place. So we're talking about a huge portion of retail traders that got margin calls in the month of July. And again, I think while these companies have been massive beneficiaries of all of this spend from both Chinese and U.S. companies trying to build out this entire process, you just have to take a step back and say, okay, when an index, I just want to pull the numbers here so I'm not speaking out of turn. When an index goes from 4,300 in January to the high of 9,000 by June, yeah, you have to be prepared for it then to now collapse back to $6,000, not dollars, this is an index, but 6,000 by late July. That's what we have seen out of the Kospi and what we have seen out of a lot of these semiconductor companies. Yeah, you doubled in the course of a few months, and I don't think investors are questioning whether or not you'll still have sales. They're merely questioning whether or not your company is worth what they paid for it back in June.
Yeah, it's definitely a valuation case that you have here that is being sorted out on a daily basis with the market, where from everything that we've seen in terms of the amount of CapEx that these big hyperscalers are willing to dish out, and we'll get a little bit more clarity on that. I believe Meta is reporting earnings this week, but in the past we've seen the hyperscalers continuing to spend. So
Meta, Microsoft, Amazon all will have something to say about that. They're all reporting this week. Apple too, but they're not spending the same way these other guys are.
Right, but Google its stock had taken a hit.
Yep.
I believe that was last week, from increasing their CapEx up to $205 billion, I think, on the high end for this year. So continue to sort of reinforce this idea that they're going to spend. So the earnings are going to be there from these companies because that's backward looking. And then from a forward looking basis, it seems like the momentum continues there for these hyperscalers to continue to spend. But the fragility that we're seeing is a reflection of the fact that this has been a really crowded trade this year. It's been the biggest story in markets. I think easily there's not really another case that you can make beyond this. And every single day, it seems like investors are trying to assess whether they should take some of their profits, and you continue to see the seesawing of prices.
I guess what I find interesting, and I try not to allow my own opinion to inject too much in terms of what I'm reading and overall sentiment, but more and more I hear investors stating more publicly that they think that this may result in a market bubble that pops at some point.
Mm-hmm.
I think that is a more commonly held belief than it was a couple of years ago. But I'll tell you, I have a tough time putting together the dominoes falling of the semiconductor stocks, the companies that are making all of these sales, falling apart before the pivot happens from the big spenders. Because, again, what we heard from Alphabet was that they are continuing to accelerate their spending and they intend to do more of that next year. I suspect that this week we're going to hear the same from Meta, from Amazon, from Microsoft as well. And frankly, the returns that these players are seeing on developing these data centers are still really good, even with the high prices they're paying to semiconductors. And so I do believe that gravy train flips at some point, but I don't really see any signs of it yet. And so that's to me the interesting point, is that these semiconductor stocks are getting whacked already without even a turnaround in the spending plans of the big, giant builders, the hyperscalers. At some point, I think the hyperscalers are going to get some feedback from investors that they can't keep doing what they're doing. But so far, it hasn't been the case, and yet the semiconductor stocks are taking a hit. So maybe it's just another cooling off period. These stocks are defined by volatility as a feature, not a bug. But it's been a pretty compelling drop for the last month or two out of chip stocks. Quick break. Wall Street Watch coming up next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, Every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about how Medicaid irrevocable trusts operate. Todd, many people are afraid that if they transfer money to an irrevocable trust, they will be giving up control of their assets and will have to ask their trustee for permission to spend their own money. Now, is this a valid concern?
No, it's really not. And folks, when you think about irrevocable trust, please remember that there are many different kinds of irrevocable trust. There are some that require a loss of control, rigidity, inflexibility. However, the trust we're talking about when you're protecting assets from a nursing home allow the donor to remove and replace the trustee, allow the donor to have really an unbelievable amount of control over the assets that are in the trust. They can live in their house, they can manage and invest their own money, they can sell a house, they can buy a new house. When the money's invested, they can have the income come directly to them. Folks, the control you keep over your assets in an irrevocable trust is really something you must try to learn about. And that's why we're giving you away a guide today to help you understand these trusts.
Request this brand new guide from the folks at Cushing & Dolan at 866-848-5699. It's called Unlocking the Power of Medicaid Irrevocable Trusts. Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. 866-848-5699, or you can request it from legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets are mixed as the chip sell-off deepens over AI spending worries. Right now, the Dow is up 0.75% or 384 points higher. S&P 500 down over 0.1% or 11 points lower. NASDAQ selling off over 1% or 263 points lower. Russell 2000 down about 0.75%. 10-year Treasury yield down 2 basis points at 4.61%. And oil down about 1.5%, trading at $81 a barrel. Overseas, both Samsung and SK Hynix plunged more than 13% amid the chip sell-off. U.S. listed shares of SK Hynix plunging 9%, while other chip makers, including AMD, Micron, and Intel, are seeing substantial losses as well. Memory stock SanDisk also getting hammered by 14%. Meanwhile, Boeing is up 4%, despite the aircraft maker posting a wider-than-expected loss for the second quarter, where Boeing said its long-delayed Air Force One program weighed on results. Elsewhere, Bloomberg is reporting that Visa will eliminate about 2,600 jobs. Visa will report quarterly results after today's closing bell. Coca-Cola beat earnings expectations and raised its full-year outlook as the beverage giant saw strong demand for its drink. That stock up by 7%. And Apple has surpassed a market valuation of $5 trillion for the first time. Separately, the tech giant announced a new leasing program with Klarna that allows customers to pay monthly for devices and then return, upgrade, or buy them. I'm Tucker Silva, and that is Wall Street Watch.
Well, in addition to all the semiconductor news, as Tucker mentioned, Apple crossing the $5 trillion threshold, as we have seen this rotation out of AI-heavy stocks and into those who are not so much. Apple will be reporting earnings on Thursday after the bell, along with Amazon, MasterCard, Shell, Anheuser-Busch, all reporting before the bell on Thursday. Before them, though, Wednesday, Microsoft and Meta will be reporting earnings after the bell. Bunch of others as well, but those are the big boys who will be reporting on just how big their AI spend was, and facing the same tough questions that Alphabet and Tesla did last week in terms of their CapEx. In addition to all the earnings reports, though, this week, while we were getting retail inventories, some consumer confidence data this morning, the big announcement will be the 2 p.m. decision tomorrow on interest rates, and then followed by the 2:30 p.m. press conference from our boy Kevin Warsh. Kevin! There we go.
Kevin.
Yeah, thank you. What is unique about this meeting? Yes, new-ish Federal Reserve President who wants to shake up how the entire committee works, measures things, looks at different data points, communicates with the public. All of that is pretty unique. What is especially unique, though, is the fact that we are one day out from the announcement, and markets don't seem to know what's going to happen. There's currently being priced in a 68.5% chance of no move in interest rates and a 31.5% chance of a 25 basis point hike in interest rates. As I've talked about before, a single 0.25% move in interest rates does not affect really anything in the real world in terms of borrowing costs or anything else, but it would send a pretty big signal to markets, to investors, and to pretty much everyone in the monetary world that, hey, yeah, we are serious about inflation and we are moving with this hike in this direction here. I tend to think it's not going to happen, but it would be a meaningful statement to make about the seriousness of the threat of inflation to this economy right now.
This is the first time since I've really been doing the show and been covering these Fed meetings so consistently that I feel like there is this uncertainty in the air, Mike. It seems like oftentimes we went to these meetings with almost full assurance as to what was going to occur. And this is part of the new regime with Kevin Warsh, is that there is going to be a lot less transparency, a lot less sort of posturing as to where they think interest rates are going to go. The idea of a hike, like you mentioned, would it have a significant economic impact? No, probably be relatively muted, but the sentiment shift alone, or the shift in the way that the Federal Reserve is going to move if they were to come out with a surprise hike tomorrow, would, I feel, really shake up markets quite a bit, because markets are consistently looking for certainty, and any sort of absence of that perhaps from a surprise notice tomorrow of a hike would really shake things up a bit. So it has been the first time I can remember that I will be really a little bit more locked in on what the result of this decision is going to be, because oftentimes you could sort of put it on in the back and look later in the afternoon to see the impact on markets, but it seems like there is going to be a lot more scrutiny on this one coming up.
Yeah, it looks like it. And it also seems like Kevin Warsh is getting some of that family fight that he was looking for. This is a term he's used a few times now to say, hey, I want to shake things up. I want us to have disagreements in the Federal Reserve. Remember that he is not the decision maker when it comes to interest rates. While he might be the mouthpiece, he's not the decision maker, and it is voted on by a committee of different individuals. And Kevin Warsh has made public that he wants to have more heated exchanges, more debates about the right way of measuring things. The way it was summarized by Nick Timmeros from the Journal is he wants them to abandon the intellectual habits of an economics profession he thinks led it astray. One of the things that we've been kind of wondering, so Nick Timmeros, you've maybe heard us mention his name before. He's a writer for the Wall Street Journal, and for the last decade or so, he has been the inside scoop at the Fed.
Real plugged in.
He's clearly been the person that, if not Jerome Powell himself, then other members of the Fed went to when they wanted to convey a message to markets and the general public. He got the call, and he printed a newspaper story about that call. What's interesting to me, we've wondered, hey, is he still going to be that relied upon source with Warsh? Like, he might be, he might not be. We don't really know yet. This article that was written today makes me think he might not be.
Why?
It gave me the sense that it was an article very much with inside stories, right?
That's what I was going to say. That dinner conversation thing seems very insider baseball.
Precisely.
Yeah.
It seemed very insider baseball, but it seemed to come from the perspective of everyone but Warsh when I was reading it, right? It seemed to come from the perspective of all the people that were disagreeing with Warsh, Waller making the point about, hey, this is all pointless, and others. I did not get the perspective that, hey, Kevin Warsh sat down for an interview about all this and was really getting his points across with this piece. And so I just do wonder, hey, he might still have the inside scoop. He clearly still has enough connections to, tell the public what happened at this dinner among the 14 or 15 people that attended it. It's unclear to me that he has the ear of the president of the Federal Reserve Board of Governors, Kevin Warsh, who, didn't seem to really come across in this piece. So we will see. It's tough to tell from one article whether or not Warsh is, using him in the same way that others did, but I'm just not entirely convinced that this is the perspective of Warsh.
It would run really counter to what Warsh wants to be about, which is keeping his mouth shut, or
right.
the Fed is keeping his mouth shut. So if he's whispering sweet nothings into a Wall Street Journal reporter's ear, that would run counter. And I think the phrasing was used in this piece by Nick Timmeros of tight-lipped, that Warsh has been really tight-lipped in terms of the way he views things, and Timmeros is going to be much more likely to get dissenting feedback from perhaps Waller and others, or Waller's associates, and it seems like that's where the information that he has been gleaned from, is from these dissenters.
Which also raises the question to me, if you're saying that we're going to be a tight-lipped Fed, but all of your other governors are talking to Timmeros and talking to the Wall Street Journal, does it matter? Right? Like, I will say that it is unique that we're not really sure what's going to happen at this next meeting, and so I'm thinking that may be a result of Warsh's new policies. But it may also just be that, we know exactly what the Fed is going to be doing because we're still getting the opinions of the other 12 voting members here.
It's just going to have to come from different back channels, right? Usually it's more often done through speeches that the members are giving at various locations, but perhaps now it's more through these sort of Wall Street Journal pieces or snippets here and there that reporters are gathering. But it does seem like he is very intent on shifting some of the projections, and again, this is all to be debated over the course of the the foreseeable future here, but it does seem like he wants to lessen some of the commentary from them. So maybe it's back channels instead that we get the information.
So again, 2 p.m. we will have that interest rate decision. 2:30 p.m. will be the press conference where reporters probably won't get a lot of their questions answered. Right now, market's pricing in no action on that Fed funds target benchmark interest rate. In terms of what we're seeing in mortgage markets, which is the main place that we look at the effect of interest rates, the 30-year fixed rate mortgage, according to Mortgage News Daily, still sitting around 6.8%. That's with interest rates having fallen for the last few days, with oil prices cooling off. So let's take a quick break. When we come back, I do want to talk a little bit more about interest rates, housing market, etc. next on the Financial Exchange.
The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
The most important part of an inheritance isn't always the money. It's making sure your family is prepared for what comes next. Hi, this is Chuck Zada from the Armstrong Advisory Group. Too often, important estate planning decisions are discovered only after a loved one has passed. Your plan may be very specific, but it can still fall short if your family doesn't understand your wishes. Our new guide, Talking to Your Kids About Inheritance, explains how thoughtful conversations today can help create greater understanding tomorrow. You'll learn when to have these discussions, how much information to share, and why clear expectations can help your family navigate the future with confidence. You can get your free guide today by calling 800-393-4001. That's 800-393-4001, or request it online by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke. Sponsored by the Massachusetts Department of Public Health.
Subscribe now to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. We'll get you caught up on anything and everything you might have missed, right here on the Financial Exchange.
The 2026 DAV 5K Boston is set for Saturday, November 7th at Fort Independence on Castle Island. If you want to participate, now's the time to register. More than 800 runners have already signed up, making this the fastest registration pace in history. The event will be a sellout soon, so head to dav5k.boston for all the information on how you can take part. And if you can't, please consider making a donation. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston. Make your donation today. That's dav5k.boston.
Well, it's been 4 or 5 days now of no strikes on Iran by the United States or by Iran on neighboring countries targeting U.S. military bases. As such, oil prices have continued to fall over the course of the last few days. We now have the West Texas crude benchmark down another 1.5% today, after being down a good 5% yesterday to $81.33 per barrel. It's not moving gasoline prices much. We are still sitting at basically $4.10 per gallon on the AAA national average for gasoline prices. As we've talked about, this is actually pretty logical in terms of what we are seeing here. While some oil has been able to move from the Strait, you still have pretty much all the refining capacity in the area offline. You have Russian refining capacity being taken offline by the Ukrainian war. And you have Chinese refining capacity that is taking a hit because they have been importing a lot less oil over the course of the last several months. And so gas prices does not appear to be just greedy gas station owners. It's in fact a difficulty in finding refined product. Nonetheless, this is, I think, to me, probably the big reason we don't see any move in interest rates from the Federal Reserve. Were I Kevin Warsh, I would not be reading too much into any ceasefires, but what we did get was a lower June CPI because of reduced oil prices. And once again, while a lot of volatility in oil prices, no insinuation from markets right now that we are going to be facing shortages in the very near term due to this conflict. So again, I were I in the shoes of Kevin Warsh, I think that I would be more inclined to raise rates and get everyone to take me seriously because of it. But I think there's enough justification here for keeping them lower that that's what we're more likely to see.
Yeah, you could likely do a bit of a middle ground approach there, which has been mentioned in several of the news publications that we read prior to the show, of not raising rates at tomorrow's meeting, but really making as strong insinuations as Kevin Warsh is willing to, that September they're really going to be on the table, and that's the way that the futures are pricing at the moment.
We want to talk a bit about the starter home in this country, which is seemingly existing less and less. I don't know, what would we even define the price point for a starting home in greater New England? I know that's a big range, but if you're going to be close to a metro area in New England, I would think that a starter home, even in the cheapest markets, is in that
higher than that,
450 to 500,000. I think if you were to be in a suburb of Providence or a suburb of Manchester, you might be able to pull something like that off. If you're in a suburb of Greater Boston, then you might be more in the 600,000 to 800,000 range for that starter home. And the problem remains that the idea of the starter single-family home is kind of a thing of the past these days. It's not getting built by and large, and it's exceedingly hard to find when they do become available because of all the competition for them these days.
Yeah, the single-family home market of existing inventory, like you're pointing out, at that starter level has decreased significantly. And just to give some numbers on kind of what we're kicking around here, Greater Boston area, I'm starting at the highest for a single family home. Median is about $1 million in terms of what it looks like for the median.
So the median single family home purchase Greater Boston is $1 million.
Exactly.
Yep.
Then you start to go into broadening out to the state of Massachusetts. You're talking about $625 in terms of the median sales price. Going out to New Hampshire, you're at about $575,000, and so that just gives you a bit of the range. If you look at the national average, it's anywhere from $400,000 to $440,000. Barron's defines a starter home as 85% of the median sales price for the country. So if we extrapolate that to some of the numbers that we're seeing here, it actually is a little bit closer that you could be in that $450 range if you're talking about New Hampshire.
Outside of Greater Boston,
Yeah, exactly. So where we sit is that in terms of the starter home, it seems like those are coming more often from home builders in the Sun Belt and some other areas. It's really not unique to our New England area where some listeners may be. But if you look at DHR Horton, they're a big home builder. They have said that 65% of the mortgage originations for the new homes that they're building are coming from that demographic of the first-time home buyers, but less of a market. And to be clear, that new home buyer's market just in general makes up a very small percentage of the home market itself in terms of transaction volume. Usually it's you're buying an existing home, and there's just less of those existing homes out there in that starter home market for people to buy.
It's also just not terribly profitable for home builders to build these things.
Yeah.
You know, like especially here in New England where land is scarce. If you get your hands on a 10 to 15,000 square foot lot and you're trying to decide what to do with it, the incentives are all stacked up to build a 5-bedroom, 4-bath home that you might be able to sell for over $1 million because the cost to build it and the cost of the land is just the all-in cost is not that much greater than building your 3-bedroom, 2-bath starter home.
Right.
And so
and the constraints of labor too.
In those areas where land is constrained, the starter home is now a condo. Like that's just kind of the state of things these days. Let's take a quick break. A lot more to cover in the second hour of the Financial Exchange. We'll be right back.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our #1 killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our new guide this month is titled Talking to Your Kids About Inheritance. Mike, what are some of the considerations for what needs to be brought up in conversations with your kids about their potential inheritance?
Well, first things first, I don't think it's always necessary that you do have the conversations, but just beware that if you don't, it can lead to confusion after the fact, especially if it's a non-equal distribution of assets. It can oftentimes lead to infighting. We've all seen that one before. And it can oftentimes lead to people making financial decisions because they're unaware of an inheritance that could be coming that might have been different had they been aware that someday, hey, this might be coming my way.
They're never easy conversations to have, but they're typically easier before there's a crisis as opposed to having to have them during or after the crisis.
Well, I mean, to put it plainly, at a certain age, you might not be able to explain the decisions, and that can lead to even tougher conversations. But what I would urge people is to, think about how to have those conversations, because, like I said, on more than the number of occasions that I would like to see, I have seen inheritances tear families apart. Unfortunately, that's what money can do to people. And if you have those conversations up front and early on, it can at least go a long way to potentially prevent that.
The guide is titled Talking to Your Kids About Inheritance, and you can request it by calling 800-393-4001. You can also request it online at armstrongadvisory.com, and that phone number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Welcome back to the Financial Exchange. The rotation out of tech continuing in early trading today ahead of earnings from Meta, Microsoft, Apple, and Amazon. Just making sure I didn't screw that up. We've got the NASDAQ off 0.75% at the moment, while the Dow is up 0.2%. And the NASDAQ as a whole peaked back on June 1st. So June 1st of this year, we had the NASDAQ sitting at about 27,000, and we're now sitting at 24,759. So a decent fall on that overall tech-heavy index here as we close out the month of July. What does that come to? Like a 10% drop thereabouts? 8% drop on the index so far? And remember, this is not all just AI semiconductor stocks. While they have started to make up a larger portion of that index, it is still heavily comprised of the likes of Apple and others. But clearly a bit of a sentiment shift when it comes to semiconductor stocks in particular. Chip designers, memory makers, everybody down a little bit further down on that supply chain has been getting asked a few harder questions about why investors should be paying what they have been for their stocks. But interestingly, it's not been a wholesale market sell-off, right? It has not been a, hey, take risk off the table and go put it in cash, or at least that's not what it seems like, because the S&P the last couple of days has been off by, right now we're off by 0.1%. Yesterday we were basically flat on the S&P 500. So it is much more of a rotation into different areas than a full-on risk-off panic sale of stocks at the moment. Like I said, we'll have some big earnings this week. We'll have Kevin Warsh at the Fed taking the stage at 2:30 p.m. tomorrow to talk about interest rate decisions. Anything else catching your eye this week in terms of big news? Obviously, there's some wild stuff happening in Korean stocks that we talked about in the first hour of the program and other stuff. But the big news is going to be these earnings and the interest rate call.
Earnings, yeah, that's the story of the week for sure.
Apple snatching back up the title of the world's most valuable company as they crossed that $5 trillion threshold today. Again, this is part of that rotation story, right? Semiconductors getting whacked. What are they doing with the money? Well, seemingly some of them buying into Apple stock, which is up about 1.33% today. Piece from Barron's is that well, don't expect it to last. What do they lay out as the concerns for Apple? I mean, certainly they've already talked about their rising input costs for all of their hardware that they're making.
To me, that's the biggest thing that you have to point out here, Mike. Though Apple is up 24% year to date, it has been more a reflection of the idea that they are not so deeply entrenched in artificial intelligence and data centers and all the stuff that we've talked a lot about on the program. They're basically, like you've said, the anti-AI play, where their still core business of selling iPhones and other hardware devices, that remains really the story. But what investors are ignoring with this 24% rise year to date is that Apple sits at a premium on a price to earnings basis over its 5-year average that's really significant. And what's not being accounted for, what this analyst mentions here appropriately, is the fact that their input costs are rising significantly for their products. So if you are looking to buy an Apple laptop, or it was the iPad 2, those two product lines, they've had to increase prices anywhere from roughly 15 to 20%. So their margins could be compressed because they're combating an environment where the memory chips that go into your iPad or to your laptop, which are used to store your pictures and all sorts of other types of files, those prices have risen 2 times, 3 times, a really significant amount over the last year or two. And so from a business perspective, rising input costs reflecting in higher prices for the devices, that may mean less sales. None of that is really being talked about, it seems like, when it comes to Apple, or less so with the trading action.
Agreed. I gotta be honest, I'm having a tough time determining how much it matters. One, Apple customers seem to be some of the least price-sensitive people that I've ever met. Right? Like, let's be honest. The AirPods and the iPhone itself are not the most cutting-edge technology out there. There are plenty of products that are significantly cheaper than them, and people pile in and continue buying them. I'm not sure that a price increase, if Apple has to push it through to maintain margins, is going to dramatically affect sales. Maybe I'm missing the boat on this. The other piece that I'm pretty confident about, and maybe I'm overly confident about this, but what I believe we are seeing in the computer hardware and semiconductor memory chip business is commoditization. You are seeing massive profit margins that are attracting new entrants to try and produce as much of it as possible. And my expectation 5 years from now is we are left with way more semiconductors than we need. And so Apple is most certainly facing pricing pressure right now, expense pressure from all of the hardware that goes into their machines, and they're going to have to raise prices in order to deal with that. But I sure do understand why investors are looking at them and saying, wow, they're sitting pretty. Right? This is a company who has not poured billions of dollars, hundreds of billions of dollars into artificial intelligence build out. And instead, they are playing this long game that they have played pretty much throughout the history of the company, which is, let's see what floats to the top here and we'll just scoop it up.
First isn't always best, right? I mean, if you look at their history, they weren't the first smartphone device. I mean, they created their own category within it, but they weren't the first device that wasn't using internet widely on it. BlackBerry,
they weren't even the first MP3 player.
Exactly.
Right? Like, they have never been the first. They have been the one who has made the product usable. And maybe you can make the case that AI is different this time. But you're talking about a company now. I want to pull up some balance sheet information, where this company is sitting on tremendous amounts of cash, and it's tough for me to make the argument that when we figure out what the most usable software system is for Apple to adapt and make their own products better, is anybody going to tell Apple, well, no thanks, we don't want to put this into your phones because we want to build our own hardware ourselves? I don't see it. I don't see any of these other companies coming out and saying, yeah, we're going to try and dethrone the iPhone.
No, not necessarily, but I think from what the core of this Barron's piece is not necessarily where they sit from a positioning standpoint. It's what investors are paying today for the future earnings growth of Apple, which is expensive. They're at about, it was 38 times the expected earnings for the current fiscal year as of Monday's
Which is
close.
extraordinarily pricey.
It is. It is really pricey. And so that's what it comes down to on the valuation front. But I agree with you in terms of positioning. They certainly are not as entrenched in this AI bet. They're taking a wait and see approach, which has benefited them over their history. And there's been other examples that I can think of, like Toyota on the EV side of things, where businesses being prudent and sort of waiting and seeing how a market develops has benefited them. Of course, you can always argue that there has been a lot of companies that have taken it on the chin for being too slow to move. Think about Microsoft with the mobile phone era. They really missed the boat there.
Let's take a quick break. When we come back, MarketWatch has a piece today. Your retirement math may have a surprising flaw. We'll talk about that potential flaw next on the Financial Exchange.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at ArmstrongAdvisory.com. That's ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act, and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Fresh, local, in season. Celebrate National Farmers Market Week, August 2nd through 8th. Visit your local farmers market for peak summer produce, from sweet corn and heirloom tomatoes to peaches and blueberries. Every purchase supports local farmers, strengthens your community, and helps keep fresh food accessible across Massachusetts. Sponsored by Mass Farmers Markets, supporting over 200 farmers markets statewide. Find a market near you at massfarmersmarkets.org.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show.
Mark, we've got actually what I think is a pretty solid piece from Market Watch this morning on retirement math. And it basically comes down to budgeting for folks' retirement. And they point out two areas that I think are most commonly overlooked. And it's healthcare and it's housing. And so let's dig into those two items and what we do when preparing our clients for these two items that are awfully unpredictable. But let's start with the housing one because it's usually a lot simpler. Yes, the majority of folks who are hiring an investment or financial planner to manage their retirement also happen to own their home and so have generally pretty stable housing costs in retirement. If they have a mortgage, it's at a fixed rate. If they don't have a mortgage, then they're just really looking at their property taxes and insurance costs. But guess what's been going through the roof over the course of the last several years? Property taxes and insurance costs. And that's only really the start of your housing costs in retirement if you're planning to age in a home, right? I mean, we talk extensively about the overlooked pieces of this. The cost to maintain your home, we generally use a factor of like 1% to 2% of the home's value on average, because you hire somebody to fix the roof every 20 years, or you need to repave the driveway or do this, that, or the other. When you're 80, it's probably closer to 2% to 3% of the house's value. Why? Well, you're not climbing the ladder to clean the gutters anymore. You may not be mowing the lawn anymore. And you may need to put in a bathroom downstairs, or you may need to move the laundry upstairs so that you're not doing as many stairs. And so that piece gets heavily overlooked. I don't think people were prepared for the dramatic increase in insurance costs, which, by the way, I have a really tough time seeing how that goes down. And then two, most people don't accurately account for how much more it's going to cost to stay in their home when they become less mobile and more dependent on other people.
Those are, you hit on really some of the biggest areas to focus on there. I'm trying to think of others, but yeah, largely it comes down to property maintenance, homeowners insurance, and real estate taxes that are the areas that are critical to think about with housing costs. And depending on your area, can be more substantial than others. We've obviously seen on a lot of the coastal areas that the costs associated with being by the water has gotten crazy, and that I think continues whether you're looking at Cape or Florida or other areas that are impacted by that proximity to the water.
On the healthcare side of things, I think most people are generally aware of the risks here, but maybe not the scale to which it can actually add up.
They may think that, hey, I'm covered by Medicare, and as a result of that, my healthcare costs are relatively constrained. I would agree with you that in conversations that I've done with numerous clients or prospective clients, we typically build in this idea that, hey, healthcare costs are going to outpace general inflation when we're looking at planning scenarios. And there hasn't been one person that I've run into that has disputed that notion. In fact, I usually get emphatic noddings of heads when that concept comes up. But the scale in which healthcare costs can ramp up quickly through a significant healthcare event that could be above and beyond just what's covered with your normal Medicare Part B and supplemental plan coverage, I think a lot of us know that it can be dramatic, the impacts of that.
And forget about the Medicare coverage stuff. If you have an event that requires long-term care costs, none of which are covered by Medicare, in New England, you're talking about $15,000 a month for, the most extreme types of care. And that's an average, not an upper limit.
Dental costs too. It sounds crazy and you laugh to say it, but like the biggest withdrawal requests I get from clients outside of home ones, which that's obvious what amount of money, it's a lot usually when you're touching your home.
Yeah, it's a new set of teeth.
Dentist requests are up there, and then dealing with pets, those are probably the two biggest one-off withdrawal requests I'll get from clients. So that's part of it too.
Here's the point. A lot more goes into this than the simple 80% math rule of thumb, or frankly something that I say all the time, which is, hey, your current spending is going to be the best indicator of your retirement spending. And I do firmly believe that, but only initially. Right? Like the best indicator of what you're going to spend when you're 67 and retired versus 66 and working is whatever you were spending when you were 66, plus a little bit more for vacations and dining out. The best indicator for what you're going to spend at 87, nobody has any idea, because it's a total roll of the dice in terms of how the world develops over the course of the next 20 years and how your health develops over the course of the next 20 years. But the point would be, if you are not stress testing these different scenarios, if you are not at least understanding of what could happen if you face one of these bad scenarios, then you're doing yourself and your family a disservice. If you would like help stress testing those scenarios that you could hypothetically be looking at later in life, give the folks at Armstrong Advisory Group a call. We work clearly pretty thoroughly with our clients to understand their scenarios and help them model out what could change over the course of their retirement, which more and more is lasting 3 decades. If you have those types of questions, give us a ring, 800-393-4001. You can go to armstrongadvisory.com for more information, but that number, once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Got a text to the text line. You can text the show at 617-362-1385. I've heard you say many times that the price for a builder to build a big home is not much more than a small home. My question is, why does the bigger home cost so much more? Are they just ripping us off? Makes no sense. So to be clear, I think from speaking with builders that it's not so much the home construction costs are not much more, although that is a part of it. What's really in there is you have this fixed cost of the land that you are building on. And that does not really change whether you're building a 5-bedroom home or a 3-bedroom home. And so when you add up the construction costs plus that fixed cost of buying a plot of land and either knocking down a building or building fresh, you just have that big fixed cost that you have to overcome first. And so in many cases, it just makes sense to build that bigger home. The point of, why are they charging so much more for a big home than a small home? I guess my point would be, I almost see no new small homes getting constructed, so I don't feel like we have an adequate base of those small homes to actually measure what they go for in this area, right? Like whenever you are talking about a new home construction anywhere around a city in New England, it's very rare that I see a 2 or 3 bedroom home getting newly constructed unless it is part of a bigger condo building. And so I think there's just such an inadequate supply there that the only homes that you see for sale that are smaller are the ones that were built in the 1960s that go up for sale. And yeah, in those cases, they do sell for a lot less than the newly constructed 5-bedroom home.
Yeah, I mean, the margins I just think are better on larger homes. You have more flexibility to pass through the cost to what is a wealthier buyer, you have more ways to spread out the fixed cost of the land, like you just mentioned, but also the permitting and everything else that goes with it. And
all those permitting costs and all of those inspection costs are flat no matter, I mean, again, some of them scale up for how many bathrooms you're making and such, but generally speaking, there's a lot of fixed costs that go into building a home.
Utility hookups, there's numerous things that are just fixed on a home that doesn't really differ that much, and that's ultimately why the margins are a little bit better on those larger homes, and a little bit of difference in margins makes a huge difference on the bottom line of builders.
Let's take a quick break. When we come back, full market update for you with Wall
including
Street
a big update, by the way.
Ooh.
Yeah, stay tuned.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about how Medicaid irrevocable trusts operate. Now, Todd, it takes 5 years to protect your assets from the cost of long-term care. If you aren't sure you or your spouse will make the 5 years before going into a nursing home, should you even bother to do your estate planning?
The answer is absolutely yes, you should bother. And here's why, folks. There's people who maybe don't even start their planning until they're 80. It doesn't mean just because you're 80, you don't try, you don't plan, right? 85, you plan. You don't know whether you're going to get sick or not get sick. But by the same token, when you're 65 and you're doing your planning, you also might not make it past the 5 years. So just because you might not make it past the 5 years is not a reason to get this clock started. For example, lots of times when we put assets in the trust, we leave lots of assets outside the trust, especially IRA assets. So let's say you made it 3 years, but you had $200,000 in an IRA outside the trust. If I got $1 million worth of assets in the trust, I'm happy to spend $200,000 of my IRA to get past the remaining 2 years to get me protected from the nursing home with the $1 million that went in there. So getting the clock started is always better than not having the clock started.
Cushing and Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. Request this brand new guide called Unlocking the Power of Medicaid Irrevocable Trust. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, after selling off over 1%, the tech-heavy NASDAQ has staged a sudden rally by midday and mostly erased those losses. Right now, the Dow is up over 1% or 567 points. S&P 500 up 1/3% or 25 points higher. And that NASDAQ is down only 18 points now, just below 0.1%. Russell 2000 is down about 0.25%. 10-year Treasury yield is down 4 basis points at 4.59%. And oil down 3% now, trading right around $79 a barrel. Chip makers including SK Hynix, AMD, Micron, and Intel are seeing losses of anywhere between 5 and 8%, while memory stock SanDisk is getting hammered by 14%. Meanwhile, Boeing up by 3%, despite the aircraft maker posting a wider-than-expected loss for the second quarter, where Boeing said its long-delayed Air Force One program weighed down results. Elsewhere, Bloomberg reporting that Visa will eliminate about 2,600 jobs. Visa will report results after the bell today. Coca-Cola beat earnings expectations and raised its full-year outlook as the beverage giant saw strong demand for its drinks while it served as a major sponsor of the FIFA World Cup. Coke's shares are up by 6%, and Apple has surpassed a market value of $5 trillion for the first time. Separately, Apple announced a new leasing program with Klarna that allows customers to pay monthly for devices and then return, upgrade, or buy them. I'm Tucker Silva, and that is Wall Street Watch.
After the bell this afternoon, Visa will be reporting earnings amongst others, and they're announcing... in addition to their earnings, their CEO already announced that they will be cutting some 2,600 jobs, about 7% of their workforce, mostly in technology and product operations, with the CEO claiming that AI is helping, quote, shape the way work gets done at Visa. I gotta be honest, cuts like this do not insinuate to me a direct AI impact when you're cutting these specific roles. It's possible, but nothing about these cuts insinuate to me that they keep getting phrased as, hey, we can do more with fewer people. And more often when I'm seeing jobs get cut in these specific types of roles, it's we're cutting these workers because we want other workers who are more qualified to do it. Which stinks if you're the first one that got cut, but I don't know that it's a story of overall job loss. One area where I do think we're seeing a story of overall job loss, though, is in customer service roles. Big organizations such as CBA, Microsoft, Uber, all claiming that they are replacing human customer service workers with automated AI chatbots. And while this may be a global story, I'm not sure how much of a U.S. workforce story it actually is, because quite honestly, these companies had already taken the steps over the course of the last 30 years of placing most of these customer service jobs outside the United States in the first place.
Yeah, that seems to be the next shift that we're going to see here is first customer service going overseas. The next one being that AI is going to take jobs in the sector. And I've heard sort of mixed reviews on this. Don't get me wrong. Businesses are looking to cut these expenses anywhere that they can in terms of the elimination of customer service reps. But the Commonwealth Bank of Australia, and I believe a couple other companies had actually gone back and rehired some of the employees that they had laid off within customer service because they basically over anticipated what the efficiencies would be from AI customer service agents. And I'd be interested, I'm sure a lot of the feedback would be overwhelmingly negative, but text us at 617-362-1385 on your view on AI customer service agents. But the general sort of response has been, for very simple tasks, they are effective. Password reset. I'd like to, get clarification on where my package is, but I've thought about some situations that I've bumped into recently in my personal life where we've been trying to get an exterminator to come to the house, and there's been all sorts of issues with them not showing up or me having to call back to customer service to explain where the heck is this tech that was supposed to be sent out. And I think about if I had to do that with an AI representative on the other line, I was upset that the appointment had been bailed on twice. I called yesterday basically saying, I'm going to pull my service unless you get someone out there. A human can pick up on that and send it up the chain to a supervisor, and maybe AI can do it too by certain code words, but they lack that empathy that a person would. And also, once it gets complex, when you're talking about multiple appointments that have been sort of butchered, I just wonder how efficient and effective these customer service agents can be.
I also wonder at the real cost savings here. According to Smart Outsourcing Solution, the estimated cost for a fully compliant customer support agent in the Philippines, between $800 and $1,500 a month. Granted, they can only take one call, and I'm sure that the AI agent is cheaper than that, but that is not a lot of money to risk moving to a brand new technology, right? That's just not a lot of cost that you're able to cut by making that move over. And so not only does it have to be pretty substantially cheaper, but you must believe that this is actually better than the human that's able to do the job on the other end.
I think you are focusing on like the lowest cost sort of end of things here. But if you looked at maybe a slightly more technical customer service agent that could be, I just know it because I started in the world, investor relations at a bigger shop like a Merrill or
absolutely,
Bank of America.
Those people are in the United States,
right?
And that is a different story. But I don't know that Microsoft has a lot of customer service agents in the United States.
That's fair.
I don't know that Uber does either. And so when I hear about these companies making these switch, I don't hear about Merrill Lynch saying, hey, yeah, we're cutting 50% of our phone rep work service. No, they're not doing that. What you do hear is that these, more
Comcast
basic,
and the larger ones that they're focusing on. Yeah.
I've only had one real experience with this so far. I mean, I've had plenty of chats over computer customer service with AI agents, but the only one experience I've had with a voice AI agent, I think I've talked about in the program before, is last year when I was booking a plumbing service. I called the plumber office on a Saturday, expecting to leave a voicemail and just request a call back on Monday. And instead, I got a pickup of some guy, and there was background noise like he was talking in a call center. And it took me a good minute and a half before I realized I was speaking to not a human being. Mm-hmm. But he, the agent, I keep saying it was completely capable of booking my appointment for the next week with a specific time window, sending me the text confirmation code, like everything I needed to do for that very simple task.
The low-hanging fruit, yeah.
Was doable. And so if they can utilize these tools to knock out that low-hanging fruit, it makes their best customer service people more available to deal with important issues, and it probably does eliminate a whole bunch of low-hanging jobs.
And it's just going to continue to improve, because the reason you probably picked up on it, there's some latency sometimes with those in terms of how quick they are to respond to the things that you're saying.
What happened is it kept repeating me back to me like an AI agent.
Yeah.
So the first time I noticed it, it said back to me, okay, so you're calling to confirm that you would like to book an appointment, right? And I was like, okay, this is an AI agent. Yeah. Let's take a quick break. When we come back here on the Financial Exchange, we're playing Stack Roulette.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
The most important part of an inheritance isn't always the money. It's making sure your family is prepared for what comes next. Hi, this is Chuck Zada from the Armstrong Advisory Group. Too often, important estate planning decisions are discovered only after a loved one has passed. Your plan may be very specific, but it can still fall short if your family doesn't understand your wishes. Our new guide, Talking to Your Kids About Inheritance, explains how thoughtful conversations today can help create greater understanding tomorrow. You'll learn when to have these discussions, how much information to share, and why clear expectations can help your family navigate the future with confidence. You can get your free guide today by calling 800-393-4001. That's 800-393-4001, or request it online by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Follow the Financial Exchange Show on Instagram and see what's driving the conversation about Wall Street and economic trends. This is the Financial Exchange Radio Network.
Time here for a bit of stack roulette. Paul, I'll let you kick things off for us. What do you have?
Growth is off the menu at Starbucks. This is a piece here from the Wall Street Journal. 2 years ago, Starbucks brought in a new CEO, Brian Niccol, who was a the CEO behind the turnaround of Chipotle, and within basically overnight, the stock went up 25% because of his reputation as being sort of the Mr. Fix-It to turn around companies that were struggling, and Starbucks certainly has been struggling over the course of the last few years. But here we are 2 years later and really haven't seen a lot of evidence from a turnaround perspective. Yes, he has been able to turn around some of the same store sales metrics that were in the toilet when he took over, declining 3% year over year. They're now anticipating that will be around 6% in Q2 of this year. But they had to divest their China operations, which accounted for about 20% of their store count, just because they were really unable to make any real inroads in China. Howard Schultz had once projected that that was going to be their next biggest market. And so
how many CEOs have I heard that exact same message from? Man, if we can just sell to 1% of the Chinese population, we will have a huge business.
The old TAM,
how many have been
total
successful?
Addressable market. It's
every
Tesla was temporarily. Then they ripped off their
Ford,
IP.
General Motors, Volkswagen, Mercedes-Benz. Go take a look at how all of these guys are doing in China, and the answer is abysmal. You cannot win in that market. You can use it to manufacture your stuff really cheaply, but if you think that you're, as Nike, going to, have a permanent brand presence there, you are just wrong. You're wrong. It's not going to work.
You're so right. There has been so many companies, Uber, there's just many out there that have tried to grab market share, but ultimately you're battling political forces in that country that are just going to sway any popular industry to a domestic competitor very quickly or subsidize that shift in market share.
Like Boeing is the only one I can think of.
Apple, I guess, still has inroads there. Now they've been losing market share.
Do they sell any phones there?
Yeah, absolutely. But it's Huawei, I think, was taking over the top spot.
Yeah, I hesitate to point to Apple as a raging success story there. I mean, the success that Apple has had in China has been the ability to manufacture their crap there, not sell products to the masses while not having your IP stolen. Right? Like that's the whole story here. Is every one of these companies that we've mentioned, it's not that they've been put to shame because the Chinese population has said, I don't want coffee anymore, or I don't want cars anymore. It's all come from the perspective of, okay, this Chinese company is going to learn how you do what you do and do it cheaper, maybe better, depending on the situation, but definitely cheaper, with fewer restrictions on how they do business, and for a population that seems, frankly, quite interested in buying homegrown stuff from Chinese companies.
Interested or influenced to potentially.
Yeah, I mean, take your pick, right? Either dictated to or influenced through social media. That's all controlled by the state. But take your pick on how you select it. There's a number of reasons that pretty much every foreign company that's tried to have success in China has not had much success in China.
But however you slice it, bringing it back to Starbucks, they have struggled to really kind of keep the momentum going from when Nickel was hired about 2 years ago. The stock has been down over the course of the last 5 years or so, and it's come back a little over the last year, but continues to struggle in its turnaround efforts.
Starbucks was actually the perfect lead into this next story because Cracker Barrel is replacing their CEO, and it follows a phenomenon we've seen with corporate CEOs. It follows a phenomenon we've seen with Congress, which is that when looking for the safe bet in both politics and seemingly in business, the move is to hire the oldest executive you can find. What is the average member? What is the average age of Congress member today?
62, I'm going to guess.
The average age of members in the 119th U.S. Congress is 57.9 years old for representatives and 64 for senators. Mm-hmm. So Cracker Barrel, their CEO, had a number of missteps. They tried to redo the logo. They tried to remove a bunch of the artwork and face backlash from a number of their customers loud enough that they had to completely pivot on it. That Gen X CEO, who is 55 years old, is out. They're replacing her with 69-year-old, let me get his name, former restaurant executive
David Deno.
Thank you.
Yeah.
And again, this follows the trend that we saw from Starbucks. They outed their CEO and brought back in the former CEO, Howard Schultz. We saw it with Disney, who ousted their CEO and brought back Bob Iger. And it just seems to me that whenever there is a question about the business's trajectory, the safe move on the part of the board is, hey, go find somebody that ran a company for 30 years and go bring them in, which I can appreciate from a board perspective. For the board's job is in a large part to hedge against risk and drive the company in the right direction. But I'll also say, like, when was the last time that you saw a 75-year-old CEO heading a high growth company that actually successfully did a big pivot and returned to high growth and high margins, right? Like, Brian Niccol, brought in as the Starbucks CEO, was brought about because he directed a whole bunch of change at another company and was really successful there. And yeah, I don't know. I don't fully understand the immediate push by the boards to defer back to, hey, we need to go find somebody that's run a company for 30 years. And I mean, it kind of makes sense, but it is an interesting trend, and those numbers, those averages just keep getting older and older.
Yeah, businesses in general are always going to lean on experience, whether you're hiring for a CEO or a more developed role. Like, that does seem to factor in significantly, but you can certainly make the argument that innovation often comes from those younger executives, and founders are often usually behind some of the most successful companies. And that's some of the example of Schultz coming back in, a founder-led company. They're more willing to perhaps take some short-term pain for long-term gain. But
the average Fortune 500 CEO is 57 to 58 years old. So similar demo to the average congressperson.
Yeah.
In terms of other stories,
I was looking
here,
at a story here from New York where they're trying to convert office space into apartments. Second instance here in the last month of that project being one of the projects being temporarily shut down. This was 222.
I'm not convinced we know how to do this. Did anybody ask an engineer, like, hey, do we know how to do this? Like, convert an office building into a bunch of apartments?
I know that.
Did they just ask ChatGPT?
I know that for my sister being in commercial real estate, that I had asked her when this idea was bantied about, I guess, in the Boston area, that the costs behind doing it are exorbitant, and that's usually why these companies are less willing to do it. But it now seems like there are some structural issues as well that they're bumping into on two of these different projects, where there's questions about just the support beams, some support beams within the building to undertake this transformation. This has been something that
can't have support beams if you're going to get that view, baby.
Yeah.
One or the other.
It's a tough deal.
As we close out the show today, markets have now turned positive. NASDAQ, which was down over 1%, trading flat as we head to the noon hour. S&P 500, but up 0.4%, and the Dow still leading the way upwards, up 1.25%. We will be back at it tomorrow for a big earnings day as well as a Fed meeting day. So lots of news to cover tomorrow on the Financial Exchange. Stay tuned. We'll be back.